Have you noticed how our property markets just keep surprising everyone? The latest My Housing Market November house price report is out, and it's another eye-opener. Despite the constant noise about affordability challenges, interest rate uncertainty, the cost of living pressures, Australia's housing market just keeps powering on. In fact, according to the latest data from My Housing Market, home prices have now risen for 9 months in a row, and November's delivered another round of strong results across almost every capital city. And today we're unpacking why this has happened, and more importantly, what it means for you as an investor or a homeowner, and what's ahead for 2026. So welcome to Property Insiders, where Australia's leading housing economist, Dr. Andrew Wilson, and I take you behind the headlines to uncover what's really going on in Australia's property markets. Each week we share the data, the trends, the insights that the mainstream media often misses, helping you make smarter, more confident investment decisions based on facts, not fear. So whether you're an investor, a home buyer, or simply just property curious, this is where you're going to get the real story. And you will today when Dr. Andrew Wilson shares his end-of-month reports and his insights into what's driving the momentum behind our housing markets. Hi, Andrew.
Yeah, good day, Michael. And as you said, it's been another very strong month for our housing markets, our capital city housing markets. Home prices continue to rise strongly, both units and houses. And I expect we would have a similar result when we get the end of the year, final December outcomes. But it wasn't quite as strong as the October result, Michael. And that's not a surprise because our methodology, we use a quarterly data set. We use a quarterly data set because it provides us with more observations. We need that for reliability, of course. The more observations, the better. That's the more sales, the better. But we do move it from month to month. So we do get that underlying trend, not just the fixed 3-month versus the previous 3-month trend. And the point I'm trying to make here is that because we've taken the 3 months ending November as our quarterly set versus the 3 months ending October, we're actually including the full spring market. So we have September, October, and November. Of course, that is the spring selling season per se, and they were all strong results, whereas the October result included the August market, which is, although this year's been quite robust, not as strong as the September market. I hope I haven't lost you, but that's the difference. That's why we've seen not quite as strong growth in November as we did in October, because that 3-month period includes a stronger month to begin with, that is September, versus a relatively weaker month in August for the previous time series. So irrespective of that, it's still a very, very strong result. Again, the national home price increased up again by, well, not again, it was not quite as strong as the previous month, as I said, but up still 1.3% over the month with the quarter ending November compared to the quarter ending October. And that is, once again, a very, very robust result.
Well, especially if you multiply it by 12 and get an annual result, Andrew.
That's right, Michael. And when we do get to the end of the year, national house prices so far are up by 9.1% over the year. And that's the year ending the November quarter. And that will exceed what we've recorded over the past 3 years. It's well above the long-term average. And perhaps, I'm not sure we'll get to 10% increase, but we'll get close to a 10% increase on the trends for the full calendar year of 2025. Let's remember, Michael, there were many so-called pundits that were predicting those sort of numbers in reverse for 2025. Again, they've proven to be quite foolish in their predictions. So this has been a very, very strong year for home prices and for the housing market. And I don't think we've seen the end of it yet, Michael. We've still really haven't seen the full impact of the first home buyer surge that will come through beginning October, courtesy of the federal government's first home buyer scheme. And that's predicted to affect tens of thousands of young Australians, and maybe not so young Australians, moving into the housing market. And of course, they're not bringing trade-ins with them, and we still are perplexed by undersupply in our housing markets, which is, only putting upward pressure on prices and rents, which will continue, particularly for prices with that surge in first home buyers. And we will start to see the impacts of that coming forward over the next couple of months, notwithstanding, of course, we do have the holiday period.
Well, Andrew, we've already seen the impact on the ground, but I remember a couple of months ago when it was announced, you and I were confused, perplexed by Treasury's forecast that it would only just tip the needle a little bit, maybe a 0.5%. a percent rise in property values over 3 years. Boy, were Treasury wrong with that. When you bring all these people in and give them money to spend, not at lower price levels, but virtually at medium price levels
Yeah.
around Australia's capitals.
And less constraints on income levels requirements as well, Michael. So yeah, it's a very generous scheme, which will be welcomed by first home buyers that really are consistently enthusiastic about entering the housing market. And why wouldn't they be this year, seeing that near 10% prices growth? Just speaking about, I don't want to be too disrespectful here, Treasury forecasts. We just have to look, unfortunately, at the latest inflation numbers just to see how, well, perhaps wrong Treasury can be in terms of their outlook, because we're seeing a concerning spike in inflation now, which really should have been predicted given the end to the electricity subsidies over the past 6 months. So that was always going to mean higher electricity prices, which was always going to work into higher inflation. But yes, many predicted another a doom and gloom year for the housing market, and that's certainly proven to be completely wrong. We had all our capital cities, Michael, recording growth over the month. Top performers were again Perth and Hobart. They are up respectively by 2.7% and 2.6%. Which is very strong, of course. Brisbane again, which continues. Perhaps that's the market that continues to defy expectations, because it just keeps on growing. In fact, Michael, it might be interesting that Brisbane house prices this year, in terms of dollar terms, are up by around about $160,000 over the past 12 months to November. And unit prices are up by around about $120,000 in Brisbane, and still rising strongly. So that Brisbane market, again, another strong result, up by 1.8%. Adelaide up 1.6%. Darwin, which has been a booming market this year, up by 1.5%. Melbourne, which is clearly in revival now mode, Michael. I think it's beyond revival, but it's certainly picked up compared to where it was over the past few years, up by 1%. Sydney up 0.9%, and Canberra, the underperformer, up by 0.3%. And when we look at the annual results, Michael, Darwin, which, as I said, has had this remarkable boom period this year, up by 18.9% over the year. Brisbane, again, a strong year, 13.7%. I just equated that to its actual dollar increase. Perth up 13.3% and Adelaide up 10.7%. They were the leading performers. And it's interesting when we look at the 2-year performance for house prices, Michael. Brisbane is up 31.5% now over the past 2 years for house prices. And Perth, which has bounced back strongly this year, up by 40.7% over the past 2 years. So some very heady results there, we could say. Again, not unexpected, of course. And of course, Michael, driven by those 3 interest rate cuts earlier this year. Of course, we had a cut to official rates in February, May and August. Now some question marks over whether they were a little premature given the state of inflation going forward. But homeowners won't complain. Money in the bank in terms of higher house prices, and always more demand than supply in Australian housing markets, and still plenty of momentum, as we've already discussed, Michael, not just from first home buyers, but generally buyers with that sort of fear of missing out, that FOMO energy still in our markets. And we saw that with the latest auction results over the past week. Again, strong on a surge in auction listings. So vendors are still quite happy to test our auction markets towards the end of the year. And that's, as I said, another positive portent for higher prices when we get the final results for December in a month's time. Markets also up over the November quarter versus the October quarter. Not quite as strong as houses, up by 0.9%. Units have been leading houses over the past few months, but a little bit lower. They're up by 0.9%. The national weighted average capital city unit price is now up by 7.3% compared to the November quarter last year. A big rise in Darwin units, and that's a volatile data set. So we're used to seeing rises and falls on a month-to-month basis in Darwin because of fewer numbers of properties that do come through. And that's just an example of when we do have fewer observations, you can get a volatile data set. But up by 7.5%, Darwin. Hobart up 2.3%. Similarly, Hobart is a small unit market, so we can see some volatility there. But once again, that Brisbane market, Michael, just keeps on keeping on. Unit prices up again by 2.1%. Perth up 1%. Melbourne up by 0.8%, Sydney higher by 0.7%, and Canberra up 0.4%. It's interesting, Michael, that we've seen consistently over the past few months that Melbourne unit prices have outpaced Sydney unit prices. So that market is certainly on the rise in a comparative sense to that, consistently strong Sydney unit market. So another good result there for Melbourne. But Canberra, it drags the chain in terms of its unit market, lower by 1.9% over the month. So a little bit of a concern over just how that Canberra unit market is tracking. And the annual growth there in terms of unit prices, Michael, Brisbane tops up 21.2%, that Brisbane unit market. As I said, that equates to around about $120,000, $140,000 over the year. Good news for Brisbane unit holders and unit owners. Darwin up 18.7%, and Perth up 17%, and Adelaide up 15%. And of course, Michael, a lot of those first home buyers will be looking at the unit market as a destination to take advantage of that first home buyer grant. So set to rise again. And we mentioned the 2-year growth rates. Brisbane's now up 52.3%, Michael, over the past 2 years for units, but 44.8. These are remarkable figures, Michael. You've always got to look twice at them just to say, well, is this accurate? But it is. And Adelaide up 37.6%. And the Melbourne unit market's up 9.2% so far this year, Michaels. Who would have predicted Melbourne up by 10% perhaps over this year? Well, I think we discussed the potential for that. Yeah, off the back of low interest rate, because the Melbourne market has offered remarkable value because it really stood still while other capital cities were moving through that lower interest rate period of a couple of years ago. And it's certainly in catch-up mode, particularly in the unit market. And it's being driven, as we mentioned in our last podcast, Michael, we're now starting to see higher rents coming through from those low vacancy rates, which was almost inevitable. And as we also mentioned in our last podcast, we've seen a big surge in investor lending this year, obviously attracted to the lower prices initially, but also rising prices with that capital growth.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased.
So I guess what we need to do now is to look to the future a little bit, Michael. We'll do a full review of 2026, but certainly this is a good stepping stone for another positive year in 2026. We won't likely have the interest rate reductions that we've had this year. As I said, perhaps a little premature given the latest inflation data, but nonetheless, given perhaps the easing of the business cycle, the moderation of the business cycle, which is what we would expect anyway, given 2 years of very strong, particularly labour market activity. I'm not sure we're in the realms of having to discuss higher interest rates. There will be some scaring going on in regard to the prospect for higher interest rates, but I think the Reserve Bank would want to tread warily in regard to higher interest rates impact on the labour market particularly, and it would really be an admission that perhaps they went too low too early by having to increase interest rates. So I think a steady year going forward. And I think there's still, as I've said, plenty of momentum in the market, particularly for first-home buyers and investors. And as long as that momentum is there, it'll create capital growth and it just feeds on itself for increased activity. But I'm not sure we're going to see another 10% increase in house prices next year, Michael. But I'm still...
Well, Andrew, I think that's a really important message you're finishing with, because I know there's two groups of people out there. Some are wondering, hey, Is it too late? Have I missed the boat? And the truth is the bottom of the market was the beginning of 2023. Others are getting overly concerned in the other direction, fear of missing out. But I think there's a steady path in the middle. We are going to continue having growth over our property markets next year, not as strong as this year. I agree with you. Affordability is going to be an issue for more people.
Yeah.
Interest rates don't change and wages aren't going to go up as much as houses. But I still see a year of opportunity ahead, Andrew.
Yeah, absolutely, Michael. And as I said, I think that the markets have been bolstered by that low interest rates and perhaps prematurely low interest rates, but sort of who cares, because it's activated our housing markets. Prices are higher, but what that does is eventually, as prices get to the point without the drive of either interest rates or wages, they start to balance out. Because we have a very fixed environment in terms of our housing markets because of the lending environment, because we can't overborrow because the banks won't allow us to do that.
Yes.
If you don't have
That's
a higher
something else
wage,
to discuss.
well, if you don't have a higher wage or a lower interest rate, you can't afford to pay more for property. It's just that fixed environment. So that's why we see the price cycle start to ease if we don't have either of those drivers going forward. But as I said, I think with this data shows there's still plenty of momentum in our housing markets. We will have the holiday break. And as we usually see, housing markets pick up when we do get to February from where they left off at the end of the year. But we'll discuss that going forward at a later date, perhaps, Michael.
Sure. Well, thank you. I think that's a great wrap up for the month of November. And I think today's discussion makes one thing absolutely clear: despite the noise, despite the constant headlines predicting doom, Australia's housing markets remain fundamentally strong around all the capital cities, including apartments. They've done really, really well. So the takeaway is we're in a market where opportunities still exist, but you need to be strategic. You need to be informed. You need to avoid the traps that catch so many trying to time the market based on short-term commentary rather than long-term fundamentals. We'll be back each Monday with our regular Property Insiders chat. And in a couple of weeks, Andrew, I look forward to the end-of-year wrap-up and your forecast for 2026.
Thank you, Michael. Something to look forward to.